Hooty hoo, all my stock market gamblers. Welcome today. It's Wednesday. I'm so glad you're here. I'm Tall Mike. What's going on in the markets today? Well, the stock market's actually down today. Down about 200 on the Dow, down about 200 on the NASDAQ. Nothing major yet, but we did come right up to the 200-day moving average on the SPY, and we got rejection off of that. Now, I do think they're going to take another run at the 200-day moving average and try to push it through, try to push it higher. But you got a tale of really two types of investors today. You got the professional investors, the hedge funds. Now they're levered up on the short side of the market. They're betting that the market's going to go down. As a matter of fact, hedge funds have never been more short since the beginning of the pandemic. They're betting that this market is going to go down. Now this big run up, they've been selling the market. Now you got the other investors. They're the retail investors. They're the people that just are like on Robinhood, and they're not the professionals, but right now they're winning because they have this long up rally. We've got this recovery rally in the market, but we come up right to that resistance at the 200-day moving average. Still a tug of war going on, and we'll see how that plays out. Now I look at what's called the junk bonds. I look at the HYG. The HYG tells me that the market has topped out here, are very close. We could still get another week up, but we're getting really close to the top to where it will turn around. The HYG has already turned around. The junk bonds have turned around, and the junk bonds tend to lead the market. That's a little tip for you. The junk bonds, the HYG, look at what it's doing, and it tends to lead the market. It happens a couple days before it happens to the rest of the market. Very fascinating. Now, you got like Michael Burry. He's laughing at this big run up in the market because he's thinking that there's no way this can continue. Well, things can sometimes continue longer than you expect them to. It's irrational. I agree with that. The economy's not doing great, but we just had a dip in the retail sales number, and that's actually what's pulling the market down today. We'll see what direction it goes, but I'm actually in the camp that we're going to start to come down lower. Now, you may be in the camp that everything's fine. You may be in the camp that inflation has peaked out. You may be in the camp that the Federal Reserve has everything under control. I don't buy it. I think we're going to get a pullback in the marketplace. That's just my take. Now, before we move on to the real estate market, I just want to say that, well, we finally made it as a channel. We now have scammers in the comment section. They're scamming using my name, using my picture, saying to, go on WhatsApp and contact them. Look, that's not me. I don't have WhatsApp. I don't use WhatsApp, so these people are not me. Just be aware that there's scammers in the comments. Don't get scammed. Okay, so let's go on to the real estate market. What we got going there? Well, we've had a decline in the real estate market, right? The housing market down about 5% nationwide. New home sales down about 13%. These are prices. Prices are starting to come down. We took that roller coaster up. We reached the top, and now we're starting to come down. Now, when a roller coaster starts to come down, it starts to accelerate. That's right. Now, it's going to accelerate. Now, I know a lot of people don't want to hear this. Look at most people, their number one asset is the house, right? And they don't want to hear that their number one asset is going to get chopped in value by 50%. Nobody wants to hear that. That's why I'm not that popular. I'm not invited to a lot of parties because I like to talk about this stuff and people don't want to hear it. But this is just my opinion, and here's why. Here's how it's going to play out. So right now we got 2/3 of listings on the market right now. 2/3 of them are been on the market longer than 30 days. Now that's that's getting out there. This hasn't happened for quite a while that we've had this many stay on the market this long. And sellers, they're getting kind of anxious, right? They're getting a little bit anxious. The longer the days on the market, the more likely they are to reduce their price. The sellers are starting to reduce their price because they have to pay for their mortgage. So every month that stays on the market, they got to make their mortgage payment. Now, maybe they're in trouble already. I don't know. But they got to make their mortgage payment. And at the same time, the prices are coming down. So they're trying to get ahead of the market marketplace. They're trying to jump the market and get underneath where the market is so they can get a bid on their property. Now, I know not in your area. In your area, they're still going up, and that's perfectly fine. But for most of the nation, prices have started to come down, and they're going to accelerate. Now, here's why. Okay, a lot of people don't understand this, and nobody's really talking about this, but the housing market was starting to already roll over before the pandemic began. It was starting to roll over. But then what happened? Well, we had this pandemic, and we started printing trillions and trillions and trillions of dollars. But that's not all. That's not all. We told people that they don't have to make their mortgage payment. They could go into forbearance, right? Okay, so now during the subprime crisis, which was back in 2008, okay, so the default rate of people not paying their mortgages in the subprime crisis, it hit 10% was the high, where 10% of the people weren't paying their mortgages. Well, we hit 9% at the beginning of the pandemic, but then they said, hey, don't worry about it. You don't have to pay your mortgage. You can go on forbearance. Now, the forbearance programs have come to an end, but the forbearance programs, a lot of them lasted 18 months. The reason being that banks, they don't want to take the houses back. They don't want to own the houses. They're not in the business of owning houses. They're in the business of making loans, and they really don't want to foreclose on you and take the house back, right? Okay, so there's no foreclosure. There hasn't been any foreclosures for the last 2 or 3 years because everybody's in forbearance, and because also that the equity in the house has gone up. And when the equity's up, there's really no reason to foreclose, because in theory you can sell your house, assuming you didn't go out and borrow more money, refinance, get a second loan on that house, and that way you'd have to, sell your house or make the payments or go into foreclosure. But there's really been no foreclosures for the last 2 or 3 years. Now, here's the thing. Foreclosures are starting to spike upward. I don't really understand why they're already starting to go up, because people do have the equity in the house. Now, I feel some of you probably have borrowed against it. Now you don't have the equity anymore, and you got to get out, and you can't make your payment, so they are starting the foreclosures. But foreclosures don't really happen yet. Foreclosures, you see, we just started to go down. House prices started to drop in the month of June. Now we're out July and August, so it's been about 2 months. Now foreclosures don't really happen till, 6 months to 9 months out, because, people can still make their payments and they still have equity in the property. But as the equity starts to erode with the downward prices, that equity starts to erode and foreclosures start to shoot up. It's just common sense, right? The price goes down, the equity goes away, people can't make their payments, and the price shoots up. So even in the subprime, once prices started to go down, the foreclosures didn't really spike for 6 to 9 months after that. So we just started to drop in June. So this time in June of next year, there's going to be some bargains. There's going to be some really good opportunities. There's going to be a lot of foreclosures. A tsunami, if you will, of foreclosures is coming, but it's not here yet. I mean, these are still the good times. People, a lot of people don't think these are the good times. Believe me, it's not going to get better. It's getting worse. Inflation, maybe you think inflation's over. You listen to Biden, he'll tell you 0%. We had 0% inflation in July. I don't really understand what he's bragging about. We had 8.5% year over year. Yes, we're down from 9.2 down to 8.5, but I don't think we peaked on the inflation. Now, they say we peaked, right? Okay, that was the peak, 9.2. We're not going higher. Look if they continue to print money, that inflation number is going to bust above 9.2, and they just came out with that that $1 trillion stimulus bill that's supposed to reduce inflation by spending $1 trillion. Magically, inflation's going to come down. I don't buy that. You spend $1 trillion, you watch that inflation number. Now, it may stay down a month or two, but eventually it's going to break through that 9.2%. Now, I hope hope we don't hyperinflate. If we hyperinflate, the whole country goes down. It is not a good look when the country's hyperinflating. Now, luckily, we have the reserve currency, and that's allowed us to print these trillions of dollars. A reserve currency has never hyperinflated in the history of the world, right? And so that's all good. But we could be the first because we have a really foolish, we have a foolish Federal Reserve that just loves to print the money, and we could hyperinflate. That is a possibility. Okay, let's get back to the foreclosures, though. The foreclosures, all right. So right now, we have 1.7 million people. 1.7 million people are not making their payment. They're just not doing it. They're saying, I don't have the money. I'm not making my mortgage payment. Now the banks, they've been contacting people like me, people that are real estate brokers, and they're going, hey, Mike, we're going to have to start foreclosing on these people. They're really not making their payments. So we're going to have to start taking these properties back. Would you like to be onboarded with us so we can just hand you the properties and then you put them on the market as we take them back? Because we're expecting to take millions of properties back. So we'd really like to get you on board with us so that you can sell these properties. Now that's 1.7 million people not paying. But what that doesn't take into account is the 5 million, that's correct, 5 million people that are still in forbearance programs. Now they're not paying their mortgage, but they're in the forbearance program. Now you don't hear about this in the mainstream news, but the banks can see this because they have the forbearance programs. They know what's coming. They see this tsunami of foreclosures coming onto the marketplace. This time next year, there's going to be a glut of properties. There's no shortage of properties. There's going to be a glut. So if you have patience, wait another, 9 to 12 months out, you're going to see all these foreclosures coming. And then people are going to have to be competing with these foreclosures, and they're going to have to list their price below the price of these foreclosures just to get their home sold. There's going to be opportunities. I'm telling you, the roller coaster, we've gone up, it's going to start to come back down, and it's going to start to accelerate. People don't want to hear this. It's their number one asset. It's where all their money makes them feel wealthy. The wealth effect is their house goes up, they feel wealthy. House goes down, they don't quite feel so wealthy. But people that they have that equity right now, so they feel this cushion. They feel that equity is going to protect them. That equity is going to get wiped out. I got news for you. It's going to go away. Once again, not in your area, but it is my opinion that we're going down a lot farther, and we're going to start to accelerate. There's going to be this tsunami of foreclosures, which is going to be coming onto the marketplace. Now, you can have your own opinion, and I know in your area there's no foreclosures going on. Of course not. Not in your area, but I'm telling you, it's coming down. It's coming down soon. Anyways, if you enjoyed this stuff, give me the thumbs up. Why not? Why not? Why not give me 2 thumbs up? There you go. Anyways, get out there. Have a great Wednesday, and hit that subscribe button so we can talk again really soon. Bye-bye now.